Hello, YouTube. It's that time of the month. The S&P is going into expiry, or the time of the month where there is going to be some bleeding. The question just is it going to be the bulls or the bears? And what's really important to note inside of this range is that it's been really, really, really choppy. But we've really got a whole bunch of nowhere. And that becomes very obvious when we look here to our weekly chart, which tells us that we opened at 364. We're currently basically at 365, which means we have gone a whole bunch of nowhere. We also realize that this tail on the week or this lower wick is artificial, but when we look here, it's there. So we have clear areas where we need to defend. And going into basically Friday, which is going to be the expiry tomorrow, this is going to be really important because this is going to create an inside bar, I believe. I don't think we're going to break the range of the week, which is already established at 357 and 375. I think it's going to take a lot for us to go up by 10 points or down by 10 points. Doesn't mean we can't do it, but I think we're likely going to close basically like right where we are right now. And then next week, where we have either a third weekly higher high, that gets me really bullish if we can do that. And we're also above 384, or basically exiting that 20% off the all-time high. That's what's really important for me. If we close on the doji and then revisit to print another weekly low, well, we're already below our 200 weekly. We're at the midpoint between -30 and -20. And that's not a recipe that I would want to see going into next week when we have $15 trillion in market cap reporting. So at the beginning, we said, who's going to get paid, right? Pay us. That's what the bulls and the bears both want. When we look here to our algo feed, and we've made some significant improvements. So if you go check out the link in the description, you can learn more about that. But anyways, looking purely at today, so we're doing a one-day search for October 20th. This can be a little bit deceiving here because when we look at the put call ratio, it's 1.22, meaning there's one put bought for every call. But in terms of dollars, oh boy, are there some big ones. This top order right here for SPX is worth 265 million. Then we had a $160 million order for Tesla. It just didn't show up here. I'm not sure why we haven't, just a little bug. Tesla for 95 million. SPX 38 million, Tesla 36 million, 36 million, 29 million, 21 million. All these large orders, including Meta. Some of the last trades into the end of the day were actually from Meta. So when we look here now with the Snap earnings results out, we see short SPX. We're looking at orders worth more than 500,000, and this is all like in the last minute. So surprise, surprise, someone's betting big time against Meta, and I think that a lot of this is positioning. They're buying deep in the money puts, which means that they're just trying to get a synthetic short. They just want to be short the market, and sometimes that can be easier by buying deep in the money with no IV and just getting the short. So as we look here to Snap, what I want you to think about is how small is Snap compared to the rest of these companies? Because if they were buying up all these puts today, oh my goodness, do they want puts? Right? The puts, baby, just the puts. But it's not about Snap. It's actually about the rest of the S&P because Google, Meta, Pinterest, those are all advertisement companies. And Snap only being worth about 17 billion as of the close. It's not that huge, but oh boy, has it had a rough ride here, right? Woof. From roughly 83 down here to where we are in after hours now. That's -90. Wow. It was probably down like, let's actually check. So roughly 83, 83 down here to about 10. That's about 86% down. Wow. That's like Netflix, but it didn't snap back. And that's like incredible wealth destruction. So was the earnings really that bad? And when Netflix kind of reported, right, less stinky earnings, it went up bigly. It held it too. So why is Snap not? I think it's because Netflix is the biggest player in streaming and a small part of the S&P. But if they're trying to, again, just get short the market, all these large orders, these are all 5 million plus orders so far. A lot of these are short, which means that, yeah, like they're getting aggressive into OPEX tomorrow, which means they want us to go on a preset course. And post OPEX is completely different than pre OPEX, which means that's why I talked about the SPY 1 week chart and how currently with a doji, we have a very clear range established. And a pattern will emerge if we do form 3 candles with higher highs and higher lows. That's the reversal attempt. That's the reversal change attempt. Right now, we're clearly going down. Now we're going sideways. If we're going to start going back up, that's how it forms. Same thing to the downside. It would just be another dead cat bounce before we resume lower. They're just propping it up because they don't want to pay out the puts. There's a ton of them before ultimately we go lower. That's what it really comes down to. There's probably about $1 trillion in notional value expiring tomorrow. So let's just try to finish out the story here. Then we'll look at the options chain, and then we're going to be live for the final hour tomorrow, where we can go through a lot more of the stuff. So Snap, like, oh my goodness, right down. So drop, drip, 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 drop, dead cat bounce, drop, drip, 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 drop, and now just kind of shelving out here. Looks really similar to Netflix. However, these green bars are still smaller than the red ones from before. So red, big green, but it's not quite bigger than the red. So this one here, even though the volume looks good, there are some warning signs inside of it. Netflix did not have the same issue here, where we look and the green bars, actually excluding that one, but after, these green bars are massively bigger than these red ones. Same thing here too, as it's building up the steam. So that kind of gave us a clue that it could go higher, currently up by about 16% on the week. But now as we look at Snap, and this is just a precursor for the rest of earnings next week. So to get a stock down by roughly, I don't know, 25% here, this company is worth about 17 billion. Probably cost us a couple bill, right? Maybe a couple hundred million, maybe even 10 million, whatever. But this is going to set the tone for the Metas, the Googles, because those companies are significantly bigger, right? Google is one of the biggest companies in the entire market. So let's read this headline here. Snap tanks on third quarter revenue miss. I'm like, oh, okay. I'm trying to understand why it's down 25% too. Justin, explain it to me. Key point, Snap beat analyst expectations on earnings, but missed on revenue. How much are they missed by? So earnings per share, which means their profitability, arguably the most important number, period. Earnings per share, 8 cents adjusted versus a small loss, which was, so the consensus was for 0. They came in with 8 cents. That's like a huge crush. For their revenue, they missed by 10 million, 1.13 billion versus 1.14 expected. That's what gets a negative 25%. Global daily active users also beat, which is what everyone focuses on. They even announced a $500 million share buyback. Whoa, like WTF? Like, how does this make sense? It doesn't. Stock is down by, I think we said like 85, 86%. And then an additional, another 25, or now it's down 90 off the high. Like a 9-0. Like, yeah, like Snap is one of the biggest advertisers. Are they the best or the favorite? I don't think so. But they're a big player. And this is more setting the tone for Facebook and Meta and all those other companies. So that's what I mean by who's going to get paid. There's like a lot of money expiring tomorrow. So if we look here for tomorrow, August 25th, what I mentioned in our pre-market to our group is still the same thing I believe today. 375 down to probably 355 are in play. I believe we're likely going to close right around 365. And that's just because this is an area they can defend with about $2 in premium on the put side and about $3 in premium on the call side. If they are making the market at the money, and if you don't know what that means, just understand 365 is important for tomorrow because they have $5 of wiggle room. We go down to 360, these guys don't lose money. We go up to 370, they also don't lose, just from the at the money contracts. So what's going to be really important is whether or not these numbers reduce, meaning 370, 365, 360 or lower. And same thing up here, right? There's activity notably at 370, but it goes up to 375. There's a lot more puts, which means there's a lot more motivation to want to move the charts higher into tomorrow. Why? Burn the puts, baby. Burn the puts. Anything over 360 would be considered a win. We've made significant progress in a massive bear market. And what's so important about this is that the S&P is actually holding up, meaning it's actually higher than where it started the week. Let's look at the Qs now. Forgot about that pesky weekly chart. And that's right. That pesky weekly chart tells us that we got a rejection at our downtrend and also at our negative 30. And we're below our 200 weekly, which means 1, 2, 3, 4 consecutive weeks below the 200 weekly. And we got an inverted hammer. That is not good. That is not bullish. And that is likely a prop job where they're propping these things up because they want us to go down. And Snap is, it's kind of a target to get us there. That's our ultimate goal. I don't want to overthink it. Going into tomorrow, it's definitely going to be professional hour. I'm noticing that we still have US 2 and 10-year note going higher. Almost everything else is lower. And it's payday. So am I going to be in there trying to make a buck as these guys are trying to avoid paying out potentially trillions of dollars? Answer is no. Tune in for our live stream tomorrow for the final hour. Otherwise, wish you all the best of luck. Happy Friday, and I look forward to seeing you next week. Thanks so much.